In a city known for innovation and growth, Adama, the African Diaspora Art Museum of Atlanta, stands as a cultural anchor. Adama is pioneering a new approach to development, where art, identity, and community aren't afterthoughts, but infrastructure. Adama is shaping how cities preserve culture while welcoming change. Learn more at adamaarts.org.
On this episode of Create the Village.
When we see a worthwhile project, and yet it doesn't work economically, we dig in and try to figure out where the tools are in the toolbox.
This is Create the Village, a podcast about the intersection of public policy and community development.
My name is 𝗵𝗺𝗃𝗃. I'm the CEO and founder of the Integral Group, a real estate company that focuses on creating value in cities and rebuilding the fabric of communities. Affordable housing isn't just a policy challenge. It's a moral and economic imperative. In cities like Atlanta, the shortage of affordable units has reached a crisis point. Skyrocketing costs, a lack of flexible capital, and outdated development models have made it increasingly difficult for working families to secure stable, quality housing. But while the problem is complex, their leaders confronted it with innovation, purpose, and a deep sense of responsibility to the communities they serve. One of them is Mark Pollock. Mark is co-founder of Range Water Real Estate and the Atlanta Affordable Housing Fund. Over the past several years, he's been at the forefront of blending impact investing, philanthropy, and real estate strategy to create housing that is not only affordable, but enduring. In this episode, Mark joins 𝗭𝗭𝗋𝗃 to unpack the evolving landscape of affordable housing in Atlanta. From preserving aging units to experimenting with modular construction and mission-driven capital, they explore what's working, where the gaps remain, and what it will truly take to build a more inclusive housing future. So let's listen in after this message from our sponsors.
Rural Enterprises is reshaping urban real estate, from mixed-use housing to office, retail, hospitality, and industrial projects, while delivering strong returns and lasting community benefits. With over $100 million in affordable housing completed and more than $1 billion in development underway, they're leading with data-driven strategies and smart partnerships. Discover how they combine asset management, capital investment, and advisory services to transform cities sustainably at ruralenterprises.com.
In one of the country's most competitive real estate markets, BRIC is helping Miami stay ahead. As a strategic initiative of the Black Professionals Network, BRIC brings together public officials, developers, and funders to drive inclusive growth across South Florida. From mixed-use projects to policy conversations, they're setting a new standard for urban investment. Learn more at mybpn.org/BRIC.
Mark, it's a pleasure to have you on the show.
Thanks for having me, 𝗭𝗭𝗋𝗃. I really appreciate it. It's always great to talk about issues that are critical to our city.
Absolutely. Let's start, Mark, if we may, with the Atlanta Affordable Housing Fund, which is a social impact fund launched in 2020. Can you tell us the driving force behind creating the Atlanta Affordable Housing Fund? And how does its mission differ from a typical real estate investment approach?
Well, the Atlanta Affordable Housing Fund came about through two efforts that merged right around 2020. We began talking about this concept well in advance of that. The two efforts that merged came out of the Urban Land Institute, ULI, and out of an organization that a group of private real estate developers formed called the Atlanta Real Estate Collaborative, or AREC. As a longtime member of the Urban Land Institute, I was part of the Livable Community Council in 2019, 2018. We formed a subcommittee to try to make sense out of the affordable housing problem. We put a group together. There was a group of about 6 of us, or maybe 8, and we studied the problem. We wanted to define it. We wanted to evaluate the data, and then we wanted to come up with some ideas, some solutions, if you will. So as an outcome of the study, we created a bunch of recommendations. And one of those recommendations was that there needed to be more private engagement in the affordable housing problem. That is, that we couldn't sit back as private, successful real estate folks and assume that the government was going to take care of the problem. So at about that same time, we had this ad hoc group of real estate folks calling themselves AREC, who got together over pizza and beer. And again, the mission of the group was to see if there was something we could all do to help resolve or lessen the problem of affordable housing. And, we came up with a number of ideas, one of which was to have the private sector raise some capital, create a fund, and provide capital, which is always in short order, to folks that were developing or preserving affordable housing. And that was the genesis of the Atlanta Affordable Housing Fund. It was designed to be low friction. It was designed to be easy to work with, as opposed to having to go to a bank. And it was also designed to be that last little piece, what we called the but-for capital. And hence, we created the Atlanta Affordable Housing Fund. It was pretty simple. We had 3 basic value propositions that we pitched to our investors. Number 1 was impact. Impact first. We needed to either create or preserve much needed affordable housing. Number 2 was that we expected a return of the investment. So this was truly an investment vehicle. And then lastly, we'd hoped that we would receive a modest return on our investment. And so we coined it a concessionary impact fund. That is a lower costing impact fund. And we tended to lend money out on projects in the single digit range, 3%, 4%. And there you have the genesis of the Atlanta Affordable Housing Fund.
Mark, if I may, you mentioned but-for capital as part of the key component or investment strategy deployed by the Atlanta Affordable Housing Fund when it was created. Could you explain how it works and how much critical that is to supporting the affordable housing in Atlanta at scale?
Yeah, but-for, an interesting concept. So we coined it but-for, although in reality it was designed to be subordinated debt. That is not a first mortgage, although we did do some first mortgage lending, primarily second mortgages or mezzanine debt, or in many cases nowadays preferred equity. So that even though it earned a much lower return, it got paid back before common equity. So that was the but-for. And what we did was we found ourselves, and we pride ourselves in doing this, wanting to make investments in projects that wouldn't otherwise get done without us, hence but-for. So, for example, a real estate buyer would come to us and say, I want to buy a 100-unit apartment complex. And he would have in hand a loan for 65 or 70% of the cost to buy the apartment complex. And he'd have equity, common equity from friends or family or investors for, say, the top 20%, basically a down payment. We would fill in the gap. So in that instance, if there's a 70% first mortgage and a 20% equity investment, that's 90%. There's a 10% gap in the middle. We would fill it in whatever fashion that worked, again, whether it was a second mortgage or mezzanine or preferred equity. And we would do it at very low costs. In the Atlanta Affordable Housing Fund, our loans were generally 3 to 4%. Now, in return for that, we required a legal land use restriction, a LORA, and that assured us affordability. So we were effectively buying affordability, or if you will, buying down a sponsor's cost of capital so that he could afford to rent units at below market rates, at affordable rates. We defined that pretty loosely, and we said we wanted to invest in projects that had units that rented or sold for less than 80% of the area median income, AMI. In some instances, we get much lower rents, but the guideline was under 80% AMI, and we put a dollar amount on it. So we said we'll only lend $25,000 per affordable unit. And we've actually raised that over time. It's one of the lessons we've learned is that most of these projects need more subsidy, and we are, in fact, a form of subsidy. And so I say, in reality, we're buying affordability, but that's our motivation, and that's why we're willing to accept lower returns. Our impact metrics are very simple. We try not to complicate what we're doing, and we say, how many units did we preserve, or how many units did we create, in the case of new construction, that are affordable with our investment? And as it turns out, in the first fund, the Atlanta Affordable Housing Fund, we invested approximately $15 million. And we think we created and or preserved about 850 units of affordable housing.
Now, Mark, let me go to 𝗂𝗃 your latest project. And you will continue to work on, this is a continuation of your work on affordable housing. What specific goals is EQ Housing aiming to achieve, and what role do you see it playing in shaping the future of Atlanta housing landscape?
Well, I formed EQ Housing Advisors about 2 years ago, and it was a culmination of all the things I was doing anyway, and I decided that I wanted to wrap it all up into a 501c3, a nonprofit, a public charity, because my overriding mission, if you will, in life was to do all I could to help the ecosystem, to give back to the community and to give back to the ecosystem of affordable housing. And so I formed this nonprofit to do all the work that I was already doing. And it is now doing more funds, these impact funds. It's doing other kinds of things. But the three basic missions of EQ Housing, as defined, are, number one, to acquire and or preserve, develop affordable housing, either through direct activities as a direct buyer or a direct developer, or more than likely as a passive investor. So we've done some of that in the development world, and we're doing some of that in the acquisition world. Number two, it's to expand the impact investing that we're doing. We did a lot with the Atlanta Affordable Housing Fund. We've now done more with the Community Foundation, and we're doing it outside of these funds. So number two with the nonprofit is to expand our efforts in the impact investing world. And then lastly, number three, and this is probably the most important of all, is to to connect the dots and to consult and advise and mentor the next generation of leaders in the affordable housing ecosystem. It's a low capacity ecosystem. We need more qualified folks involved in order to raise the bar. And EQ Housing is committed to working with young folks and old folks and people that have missions and are committed to helping to resolve the affordable housing crisis.
Mark, I want to get your thoughts on the affordable housing crisis that you've been dedicated to doing. Right now, Georgia ranks 5th worst in housing affordability in the United States. And what that translates is 57 affordable housing units for every 100 households in it. It's a staggering crisis. It's not just only in Georgia or in Atlanta. It's national. It became an election topic, as we know. And my question to you is, what are the toughest challenges facing affordable housing here in Atlanta, if you may speak to that? And how can the social impact investment help to address that?
Well, having worked in this arena for a while now, I kind of tongue-in-cheek say it's always about money and resources, but it's much more complex than that. It's about policy, it's about codes, it's about entitlement, it's about community engagement. It's pretty interesting how many communities complain about the lack of affordable housing, but they don't want it in their backyard, not in my backyard. So it's a complicated problem, and there are many issues to be resolved. It's not just a housing problem, although I'm a true believer in the fact that without housing, we're never going to solve the issue. And it's really a bigger issue. It's about equality in our society and income inequality. But again, we're trying to solve the problems we can solve. In the recent past, as we all know from just reading the newspaper, the biggest problems have been interest rates rising, have been costs rising, rapid inflation. And in a funny way, it's been the oversupply of market rate housing that has impacted affordable housing because prices have gone up and it's not affordable anymore. And then, of course, on the other side of the equation, it's operating costs, particularly taxes and insurance, but also labor and services. And the last 5 years have been pretty staggering. So when we see a worthwhile project, and yet it doesn't work economically, we dig in and try to figure out where the tools are in the toolbox to subsidize it, whether it's impact capital or grants or tax abatements or whatever it is. And we then work to try to figure out how to make it work. So we're problem solvers, and we generally round out the capital stack. Again, we are but four, and oftentimes we're the last little piece. And we do it in such a way that the cost of our capital allows for lower rents or lower sales prices in the case of for sale housing. We fill the gap. Now, as an aside, it's a matter of fact that the bulk of affordable housing in America is developed through the use of low-income housing tax credits. We know that. In fact, we think that almost 90% of all affordable housing in America is created or preserved through the use of these tax credits. But what's happened in the last couple of years is there's been a tremendous shortage of these tax credits, as much in Georgia as anywhere. And that gap needs to be filled. Our problem in our first fund, in the Affordable Housing Fund, was that these projects tend to be capitalized for 15 years or longer. And our first fund was limited to a 10-year life. So we were really unable to get involved in helping the problem of the gap in tax credit deals. But in our newest fund at the Community Foundation, what we call the 𝗂𝗍𝗄 Fund, we have a 15-year duration. And we also have, as an aside, the Together ATL Fund, which is a philanthropic fund, also have longer-term capital and even yet lower costing capital. So what we've done to help offset these issues of affordability is we've now made a number of investments in filling the gap in tax credit deals. And more times than not, those are what we term soft loans that don't necessarily have to get paid back unless there's capital there to pay us. They will accrue their return, and in some instances, they're forgiven at the end of the life. So we've been flexible, we've adapted to the change in the environment, and we've been able to continue to be but for and a gap filler.
Gap filler, Mark, you said. Let me dig further on that. This is tied to social impact investing and philanthropy. We, in the real estate ecosystem, we talk about public-private partnership, P3. And in order to fill this gap you're talking about, it appears there's been a shift to a public-private philanthropy partnership, or if I may, P4. So can you explain and share with us what are the unique challenges of trying to blend that social impact investing with community benefits on the one side, as well as the financial returns which investors typically in the real estate transactions will lack?
Well, we're bottom line oriented, and in being bottom line oriented, we tend to focus on the economics of a real estate investment. I've often said that any good real estate deal can find capital, but that's not always true. And many times real estate deals aren't necessarily good for communities. So we try to remain true to our mission of creating equitable communities that are, in fact, community benefits and not just another project. We are always conscious of being good stewards, because that's why we raise capital from the people we raise it from. We're conscious of being stewards of our capital, our equity, and being community-based lenders. And we're constantly focused on not just being pure capitalists, but being socially conscious. And I think we try our best to blend the two. Oftentimes, larger scale community developments are highly infeasible. So we do our best to fit within the community and to fit within the basis of basic real estate economics. It's a challenge, and it's a thin line.
Indeed. You mentioned Community Foundation for Greater Atlanta. In your role on the board of Community Foundation for Greater Atlanta, how do you see the foundation contributing to affordable housing efforts? Are there ways its approach complements or expands what is currently being done with the Atlanta Affordable Housing Fund? Or if I may ask, what your nonprofit company is doing?
That's a good question, Ade, and I think it bodes a little bit of explanation of how we evolved. That is how the Affordable Housing Fund evolved and moved over to the Community Foundation. And it also begs the question of what is the Community Foundation? I was involved in the Community Foundation well before I was involved in impact investing. I was at that point in my life where I wanted to put away some money for philanthropic purposes for the future, not just for today. And what the Community Foundation of Greater Atlanta does is it serves as basically a holding tank for private individuals like you and me to put monies that we want to preserve for philanthropy. And they do that in the form of what are known as donor-advised funds, DAF. And, the Treasury Department allows you to make a donation and takes your tax deduction and put that money into a donor-advised fund. It's technically no longer your money, but the way the law works, you have the right to direct where it goes. And so you can then contribute that money over time to various causes that seem to interest you. They had, when I joined the Community Foundation, they had a small impact fund. It was a community-based impact fund. It wasn't a real estate fund. And I invested in it just to learn a little bit about what is this idea of impact investing. And then when we fully deployed all of the capital in the Affordable Housing Fund, we were looking for the next step. We realized that we couldn't operate a standalone fund with $15 million and even cover the overhead, let alone pay a return to the investors. And at about that time, one of our friends in the system called us up and he said, why don't you come over to the Community Foundation? We'd like to expand the work we do. And we'll support you. We'll pay for an executive director, and we'll pay for the accounting and the bookkeeping and all the back office work. So you don't have to dilute this nominal return that you're going to pay to the investors. And we'll also help you raise money from all of our donors, because they have hundreds and hundreds of donors. They have the Community Foundation of Greater Atlanta is about $1.5 billion organization. That is, they have about $1.5 billion worth of donor advised funds. So they have a pretty good base of investors. And interestingly enough, they also have some very large foundations that invest their money there. So they were able, they could offer the ability to access all of those investors for what we were going to hope was going to be the next fund, a much larger, more impactful fund. And we moved to the Community Foundation. Now, the Community Foundation also serves as an umbrella to the entire community for all kinds of philanthropic stuff. So if your interests are in children or education or healthcare or the arts, they have access to all of those things, and they're constantly educating and connecting and communicating all of these nonprofits with their donor base. So it's really been a pretty good place to vest the next fund, and I referenced it already, that we call Together ATL. And also, because the group is made up of many philanthropists, to also carve out a philanthropic fund for housing. And so we made that move, a couple of years ago. And as part of that move, the Community Foundation wanted me to be on the board so that I could avoid conflicts of interest serving both leaders, the Community Foundation on one hand and the fund on the other hand. One of the interesting things, too, about the fund is that it is still run by a group of what I'll call highly successful private real estate entrepreneurs. And the Community Foundation liked that. And the investors in the fund liked that it was run by real estate folks with deep experience, although it was overseen by a very large, highly respected nonprofit in the Community Foundation of Greater Atlanta. So that's what got me over there. And I've thought about impact investing, and I've done a lot of it over the last couple of years, that it is effectively my opportunity to be philanthropic over and over again. I call it recyclable philanthropy, which was, in fact, in the housing world, a new concept. I also like to think that what we're doing here is a story that we can take elsewhere, that there are very, very few other organizations around the country that are doing this kind of work. And we're going to expand it, and we're going to take it on the road eventually.
Interesting. Matt, thanks for providing additional context on what Community Foundation for Greater Atlanta does, and also sharing with us that it takes a village to really solve this affordable housing crisis. All hands on deck. So that's good to know.
Right.
I would like for us to talk about real world success stories. If you can, from your experience, that you've shared thus far, if you can highlight successful affordable housing models and what impacts these projects have had on the communities they serve, which one of what would be a good example that you can pull from all of your experiences, to pontificate a success story or success stories?
Well, we've done a lot of interesting projects, and now at this point, between the Affordable Housing Fund and the 𝗂𝗍𝗄 Fund, we've done probably in excess of 40 projects. So we've done a lot of interesting projects. Let me give you a perspective for a minute on the scope of what we've done. We've done traditional multifamily apartments, large scale and small scale. So we've been involved in everything from 20 units to 300 units. We've done rental housing. Rental housing's been around forever. Build to rent, a new concept, a new sector in the real estate world, been around for a while now. We've invested in single family rental. On the other hand, we've invested in the for sale business, affordable for sale business, and we've invested with land trusts, and we've invested with nonprofits, and we've even invested with for-profits who have been willing to allocate a portion of their developments to affordable housing. And then we've done a couple of little out-of-the-box projects. So we've done conversions of motels to housing. We've done shared housing, or what they call co-housing nowadays. We've done accessory dwelling units. We've even done land loans and some pre-development financing. Although all the pre-development financing we've done has been secured by land, and all the land loans we've done have been first mortgages. So we're pretty cautious. We always evaluate risk and reward, although there's great risk in what we do. We like to feel like we're going to get our money back and we're going to earn a little return on it. I think one of the other parts of this discussion, this real world discussion, is that we collaborate a lot. And that's been one of the great sort of fun parts of this for me. We've invested alongside of banks. We've invested alongside of what they call CDFIs, which are community development finance institutions or nonprofit banks. We've done work with the Reinvestment Fund. We've done work with nonprofits like the Atlanta Neighborhood Development Partnership, ANDP. We've invested in projects with other large equity partners like BDI Capital Impact and Community Solutions and the American South Real Estate Fund. And we've invested both alongside them and collaboratively with them. So I would say that one of the great stories of our success thus far has been community collaboration. You know, Atlanta right now is more collaborative than I've ever seen it. We have great leadership. We have great companies that operate here, an emerging group of smaller developers. And that collaboration, that working together, that it takes a village, as you said, Ade, has made a difference. So let me tell you about one project that we funded that I find to be kind of interesting because of everything I just said. We funded an acquisition of a 180-unit apartment complex that was being acquired by a national nonprofit called Community Solutions. Now, as a side story, Community Solutions is probably the largest nonprofit in America focused on homelessness. It's out of New York. It's run by a woman named Roseanne Haggerty, who's a rock star in the business. And last year or 2 years ago, they won the MacArthur Award, which is a $200 million multi-year grant. So they came to Atlanta and we met them and they said, we want to buy this apartment complex. So we have an initiative to do more housing for veterans. And they came in, but they said, but we need local participation. We don't do this on our own. We don't go all over the country and do it ourselves. So we introduced them to a management group and we introduced them to a local nonprofit and we put up the bulk of the capital. They brought a large loan to the table from one of the agencies, Freddie Mac or Fannie Mae, and they committed to converting 50% of the 180 units to long-term affordability for homeless veterans. Now, in order for them to do that, they had to get vouchers, what you would know generically as Section 8 vouchers. But in this case, there are vouchers that are issued by the VA. They call them VASH vouchers, and that pays the rent, and they pay market rent. So as a property owner, the partnership earns market rent, but the resident only pays 30% of whatever they make. We also brought to the table a local nonprofit called Partners for Home. And Partners for Home is the sort of center of the universe in the city of Atlanta for homelessness. And they had a program where they would provide grants for supportive housing communities. So they put some grant money into this project, which basically gave us the common equity, although it wasn't equity, it was just a grant. We then went in the second position, and in this case, the agency allowed us to have a second mortgage, and then they put a big first mortgage on the property, and we're running it, and we're looking for more projects for these guys to come to Atlanta. They still have a little money left in their fund, and the collaboration and the ability to lock in housing for homeless veterans has just been, to me, one of the great case stories. And hopefully we'll do more of this. And I think we're seeing more and more and more of these preservation deals, older apartments that need to have their affordability locked down. And in order to do that, they need low-cost, long-term financing.
Mark, thanks for sharing that. That's an inspiring case study. And in there, quite a lot in that case study, you talked about leadership. You talked about a unique problem to solve. We know that in Atlanta, homelessness is still a big problem as well, even while we're talking about housing affordability. And then you emphasized the collaboration that takes place even across state boundaries with community solutions. I want to shift gear to let us talk about the vision for Atlanta's housing for the future. As we know, Mayor Dickens has a goal of 20,000 affordable housing units by preservation, as well as creation of new affordable housing developments by year 2030. Matt, as you think about the future, what changes or type of projects, and I know you mentioned the Community Solutions Project, that you would like to see in the Atlanta housing landscape to contribute to an inclusive and accessible city where everyone, regardless of income or race or background, have a shot at economic mobility through anchored by a decent housing option?
Well, there's not one answer. We know that, right? There's many, many answers. It's a complex problem. Hey, one little aside I wanted to mention, because I think it's important to mention it, and that is in our newest funds, that is the Go ATL and the Together ATL fund, we allocated 10% of the entire fund to the homelessness effort. And, I think that's going to enable us, or it's going to go a little way to enable us in Atlanta to stay out in front of that problem. I mean, we have the problem. Every place in the country has the problem, but ours has been managed pretty well. And we've seen it go down a little in the recent years, with the exception of COVID. And so we made a conscious effort, and so did our investors, that we should allocate a portion of that capital. I'm not sure it's enough, but we did that. Because it's such a complex problem, and because there's such a varied degrees of solutions to the problem, we're trying to be open-minded to doing new and different things. I mean, clearly, the preservation and creation of multifamily apartments is pretty easy, but it's not necessarily the best, most equitable form of housing. So what we've done is we've gone the full spectrum. We've done work in modern-day boarding houses, so that people can afford to live somewhere for $600 or $500 a month instead of $1,500 a month. We've done co-housing, where multiple people share a house with a common kitchen. We've done, as I said, micro units, a lot of micro units. Look, the size of the unit is directly related to the cost of the unit. And so we've done 200 square foot units for formerly homeless people. And lastly, we've done modular housing. We've done various product types. And I think that's our answer to the solution, which is its many, many answers to the solution.
Let me ask you, you said it's complex. And as I think about this, I want to get your perspective on the unique obstacles and biggest challenges that you have encountered. And this could be financial, it could be regulatory, it could be cultural, that as part of the complexity, right? And then, how have you approached them? Or better still, if you're still working on approaching them or trying to have as you call it, multiple beer and pizzas meetings, Mark, to solve this, what would those be?
Yeah. I've already said it. I'll say it again and again. It's all about money. It's all about money. Well, look, there's the issue that we deal with every day about community engagement, not in my backyard, NIMBYism as they call it. There's a big issue about public policy as it relates to codes, building codes, zoning codes, building requirements. Some of them seem to be silly if we're going to try to produce affordable housing. And I think, all of those things are difficult to overcome, but I say, hey, I can't change the world. So it's all about money. And at the end of the day, it's going to be a very, very expensive proposition, and we just have to keep plugging away at it. It's not easy. If it was easy, everybody'd be doing it, and it's not for the faint of heart.
Understood. I will say this, Mike, in terms of, definitely we need more people in this space, right? Folks like you. And I know there are young developers, aspiring developers, and leaders. And for those that are really interested in using social impact investment to address these housing challenges, or better still, we need, folks to join the army. What advice would you offer? What lessons from you've been at this for many decades. I won't say more than that. What lessons on your work do you also believe benefit others that are trying to tackle the same issue?
Yeah. Well, I think, the most important one's be patient. That's easy. That's easy for me to say, but it's not really easy for me to do, but you have to be patient, and the problem's not going to be solved overnight. So I say, in fact, it's a multi-generational problem. We didn't get here overnight. We're not going to get out of this overnight. So I think you have to be patient. You have to think out of the box. There's always a solution. It might not be obvious to you, and you have to collaborate. Two heads are better than one, and you have to collaborate, and you have to work together. And at the end of the day, it's a long game. So you just stick with it, and we'll get there.
Mark, I'll be remiss, and I'm going to just get your thoughts on this. I know that at one point in your career, you started as a teacher.
Yeah.
What part of that, mindset do you think has led to your success in the real estate development? Because think about it, not many people go on a path of being a teacher. And I think it was probably an elementary teacher or something like that, and all of a sudden you find yourself in the real estate business, So can you share your insight as to how the teacher mentality, and this is coming from somebody who is married to a special ed teacher?
Yeah. Special ed, years of working in special education. I'm still a teacher. I believe in constantly learning. I believe in the fact that there's a solution to every problem. We just haven't figured it out yet, but it's there. And I do believe, much like teaching, that it's a group effort. What's the mayor say? The mayor says it's a team effort, right?
That's right.
And it is. So I think, I'd say patience, realizing that it's a long game, and being collaborative is really what it's all about. And those are all terrific personality characteristics of a great teacher.
Excellent.
Always teaching.
Good. Mark, thank you for sharing your vision with us. The work you're doing through the Atlanta Affordable Housing Fund, Community Foundation for Greater Atlanta, EQ Housing, highlights what's possible when resources are invested thoughtfully and with purpose. I definitely appreciate this. And thank you for your friendship and for your mentorship. It's good to have you.
Yeah. Thank you, Ade. Appreciate it.
Ade, that conversation with Mark was strange isn't the right word. It introduced some conflict, right? It was both a mix of hard truths and cautious optimism. The hard truths could depress you, but he had a good blend of cautious optimism incorporated in it. He wasn't naive about the complexities of the crisis. Mark's been around a long time. He understands the full picture, from the financial scaffolding to the human costs.
That's right. EP, Mark has been around for a very long time. And not only that, he has been through different picture or different areas of this ecosystem. So he's one of those folks, I would say, sort of knows where the bodies are buried, But what struck me with me most was Mark's honesty about the structural limits of our current system. Was failing, was not working, and still choosing to stay in the work. It's kind of like he keeps reinventing himself, and he's on to a different aspect of making sure we can improve the challenges in that housing ecosystem.
Yeah, and yet you're right, and he's still out there pushing for real, workable solutions.
Yes, yeah, that's correct. He sees the cracks in the foundation, but he's not retreating. Instead, he's engineering ways to build and scale even within the constraints. This is the piece where I said, I agree with you. It's been around for a very long time, but because it's been at different positions and I've sort of seen it through, he still continues to push that envelope.
So you're right. And given that he's been around for so long, seeing so many aspects of this ecosystem and looking through different lenses at different times, what stayed with you? What insight cut through the noise and resonated?
Yeah, it's this kind of pragmatic optimism is what I'll call it, which what does that mean to me? I think that's the balance of realism and resolve, and that's rare, where you're very realistic and you're also at the same time saying, regardless of the constraints, we can push this. Why is that? Because it's absolutely necessary. And it's by far the one thing we need to do to make our city, our community, our metro area economically viable. And it's deeply needed in this moment, more than any time in our recent history.
I absolutely agree with that. In fact, I valued that candor as well. He was pretty straight up, honest, told it like it is.
Yeah. The truth is that it's a tricky dance, but Mark is navigating it with clarity. I happen to enjoy a front seat watching him do it along with some of his partners in crime.
Yeah, well, and I will concur that he certainly didn't sugarcoat it. And even the most mission-driven projects, we acknowledge, are up against stiff financial headwinds. Good intentions alone definitely won't get the deal across the finish line.
Yes. I think the key is that he's not asking philanthropy to be something that they are not. He's asking for philanthropy to be catalytic, to be a bought for tool, platform that would allow the scale of the solutions we're talking about.
Bringing philanthropy and real estate into alignment. They've certainly not been aligned for a very long time.
That's correct. He's leveraging that, flexible capital from philanthropy to unlock projects so that would not otherwise pencil, so that they can get done. And that's not just smart finance. It's real systems and realistic thinking for addressing the affordability crisis that we are dealing with at this point in time.
Yeah, and obviously marrying those two things together, bringing philanthropy into the mix, is not a common marriage, right? How do you think he is managing to bridge those two worlds in a way that actually delivers some impact?
Yes. I also tie this back to just Mark's unique position. He's one of those guys that are also in the trenches doing it in real time, and also opening up the space for other actors and players who care about impact, you know, to be a contributor to ensuring a pathway to meaningful home ownership or addressing affordable housing, the challenge of affordable housing.
Yes. And we say he didn't sugarcoat. He didn't shy away from naming the usual suspects. And we know the role that NIMBYism plays, that our outdated zoning laws play, and all the regulatory red tape that goes along with trying to get any meaningful development done, especially if it is development that has a strong housing component.
The part of the challenge, I think the part of the challenge is that people making the policies, or let's say some of our policymakers, they are not close to the reality of the crisis we're dealing with. And it takes a different lens to know and observe that, and they don't see the missed opportunities or the families that are stuck waiting for affordable housing that just never materializes. So that's the pragmatic realist and optimist in Mark is also helping to point that out without missing words about it.
Yeah, and he can speak to the fact that these are the barriers that developers run into time and again, and they're costing communities more than just time, right?
That's yeah, it's going to take sustained pressure from both ends. Yeah, talking the pressure from one end, talking about grassroots advocates are pushing from the one side, as well as institutional players from the other side of things, so that we can, in fact, create a credible and scalable alternative.
Yeah. So, all right. So with that said, we've been talking about Mark's experience, but you on the right deals, deal after deal after deal every day. You look at it through a lens of, is it viable? Is it sustainable? Is it financeable day one? And a whole lot of sieves or screens you look through. And so from where you sit, what's really slowing things down? And more importantly, what's it going to take to finally clear some of these roadblocks that we were talking about?
AP, that's a great question. The challenge is even more so now. I mean, we've got a tsunami of variables that continues to widen the gap to what it takes to pencil a deal, from the high increased construction costs, we're right back into an high interest rate environment, access to labor pool as we deal with these ongoing immigration issues is also a challenge. It's going to take a collaboration from not just the public sector, but the private sector, and the introduction of the philanthropy will also be a big part. So it's no longer a lens of public-private partnership, for what we all refer to as P3, but I think it will be more of a P4, adding philanthropy to that equation as well, such that you can more or less buy back, try to incentivize and bring down the cost in such a way that the idea of scaling affordable options will even make the numbers work. We're a long way from there, but there are efforts around, and that will include tools like, tax abatement. It will include tax abatement, meaning including real estate tax exemption. It will include a conversation we had at one point about public land, access to land. Could it be an incentive, part of the incentive? Development waivers, so instead of having tremendous development fees charged for developers, the idea of waiving some of those fees for projects that are affordable will be critical. So it's going to be a cocktails of different approaches and tools to close that gap.
Let me be clear. I assume you're not saying cut the developer fees. You're talking about cutting the impact fees that developers have to pay, right?
That's correct. I'm sorry. Impact fees. Did I say development fees? I'm sorry.
Yeah, you did.
I meant to say impact fees, development impact fees.
Yeah, I was starting to question you a second ago. Okay.
That will be going the other way. It will be going there, then there will be no developers. I don't want to run developers out of Atlanta. But by the way, I'm glad you corrected me on that. I was at a conference recently where somebody said the question about developers are the problem, and they're just mean, greedy bastards. Excuse my word. But I now said, we're missing the point, because we cannot say we want more housing, because the demand is the demand. It's a good thing when the city is growing like Atlanta. We need the supply. Who's going to do it? It's the developers. So, and you have to incentivize the developers to also want to do more deals, and I'm not saying to the extent where the public stepped up, philanthropy stepped up, and the developers, we need to have a skin in the game, which means they also have to contribute and not be greedy about it. And I think that's what it's going to take. So, but we can't make the developer go hungry and expect them to do to create the supply we need.
That's right. And what is particularly admirable about Mark is his ability to break through the silos. Obviously, he's a veteran and has been around for so long in so many different aspects. He's building bridges between developers, investors, nonprofits, and hell, even the government, right?
Absolutely. You can hear the educator in him. Is by, and I now say this, folks, a lot of folks don't know, but people that know Mark knows he actually started as a teacher. So you can just see you can hear the educator in him, the ability to translate complexity, to meet people where they are, and to invite others into the process. But more importantly is his mentorship. And I've been a big beneficiary of that as well over the years.
Okay. All right. So that orientation towards shared ownership, that's how we build, and not just housing, but movements. And Mark gave us a crucial reminder that this work stretches across generations. No single bond cycle, no one-year budget fix is going to solve it. This is a long game. And yet he's also showing what's possible. That is, what can happen when intention isn't just spoken, but acted upon with urgency and purpose. So Ade, thank you once again for sharing your time with us and for steering that powerful conversation with Mark. And to Mark, as always, deep thanks for sharing both your wisdom and your unwavering commitment to the work. Thank you all.
Next time on Create the Village.
We kind of think of it as a pathway, and we are a stepping stone along that pathway, bridging a really important gap that exists for most people between being a renter and being a homeowner.
Create the Village is produced by Felicia Ann Rosennuha and Chantrell Brewer. Executive producer Rick White. It's edited by Brennan Robinson. Create the Village is a production of the Integral Group LLC, copyright 2025.